What's up, guys? Hope you're all good and well and you're having a top weekend. So in this video I'm going to be talking about a refinement that I've made to my trading plan. So of course I'm going to share that with you, the reasonings for it and why, with a little bit of data from 2023. So if you've been with me or you've been in Anon or even perhaps TFO 2.0, you'll understand or have a pretty much a basic to good understanding of order flow, what it looks like, my take on it, and that may be the 4 hour, the 15-minute. But this video or this refinement is going to be essentially around internal range order flow. So when I'm talking about internal range order flow, I'm talking about when we're mapping out our 4 hour ranges using fractals, highs and lows, internally, so inside that range, we have price action like this. Okay, now I'm going to show you this as a basic example, and then I'm going to show you a bullish example, and then what we're going to do is we're going to have a look at some live trades that I've taken last year, some this year, some that have been missed, and some potentially that you would have taken or not taken for the same reasons. And I'll show you exactly why I'm making this refinement. So when we was trading the lower time frames, and I do trade the lower time frames every now and then, but to be quite honest, it doesn't really fit my personality. It tends to make me want to overtrade and get a little bit too confident. And of course, you can make great art from trading the lower time frames, but what comes with that is quite a lot of losses. And the losing streak is going to affect you psychologically. So trying to remove that as much as possible to try and make things process driven and almost mechanical where possible. So essentially, high time frame and direction and 4 hour bias and direction, we still need to look at that in the exact same way. Okay, so looking at the DXY, what is the next high time frame liquidity objective, or what's the next draw on liquidity saying? Then we're dropping down to the 4H. I'm using the EU for this example just purely because it's the main traded pair for myself, and I know a lot of you guys as well. So with the DXY, we're looking at top down, and the same with EU or whatever pair it is you're trading. Yeah, whether it be gold or indices or futures or whatnot. We're doing top down and we're looking at the weekly, daily, and then we drop to the 4H and we're waiting for 4H to give us confirmation for direction. Now, whether that's intent, like in this example, you can see we've got an A to B leg, so bearish intent. So in this example, if we were looking at this with a view of it being real candles, our bias would be sells from premium. But if we got an engulfing candle or a 4 hour confirmation that we've got that engulfment, let's just say it's this here. Now, that means that we're able to play the pullback phase of this impulse bearish leg. So in a bearish 4 hour trend, continuations would be shorts from premium, but we're able to play the pullbacks. Now, when I done my annual review at the end of last year, during Christmas and into January when we started to consolidate, I noticed something very jump out, and that was a lot of the trades that I was taking that were losers were counter order flow. And it's simply understanding that the entry model itself is based predominantly around kill zone manipulation, okay? Trapping people on the wrong side of the market. Now, what do I mean when I say that? So let's say, for example, I've just drawn 4 hour structure, right? And then we've got 15-minute structure internally. And we might have a pullback like this. Let's say this is the swing, this is the low, this is our range. And let's say we've got an Asia range like this, right? This would be our fractal high, this would be our low. Now, if we see this happen in kill zone, we're going to have a sell stop below this candle, the manipulation candle, and we're going to look to catch that reversal. But what happens is a lot of the time is it's just a continuation because order flow has not shifted back to bearish. Now, that doesn't mean that it's not always going to work if it shifts back in line with your higher time frame direction, or it doesn't mean that counter order flow trades aren't going to work. But 2023 shows that 71% of valid setups, and these are all the trades that I've taken, not trades that have presented, all the valid setups that I've taken according to the plan that we all use, the trades that are counter order flow, 71% of the time lose. Now, a 29% win rate is not good enough. So that's why I've made this refinement. Now, in total, if I would have taken this out of my plan last year and my actual live trading performance, it would have saved me 26% in losses. But You have to be honest with yourself. If I set some new rules, which the refinement is, it would also have taken 8% or just over percent away from my ROI in winners. But overall, that's 18, 17, 18, 19% difference in your total ROI for one pair. Now, if you've got 1, 2, 3, 4, 5 funded accounts, however that looks, that's a lot of money. 20% is, double pretty much what the S&P 500 does. So that's why it's important to be real and get the true data. It's all good and well looking at data for a couple of weeks and months ago. This isn't working. I'm not liking that. That's not enough time to switch an edge around. You've got to, and I've learned this myself over the years, but the market will go through periods where strategies don't work well. It could be the strategy's not performing well, or it could be the market conditions. A prime example is at the moment. Market conditions are consolidating. Look at January and the DXY, January on EU. The first 2 weeks of the month, we was in a sideways range on the daily and the 4 hour. Then we impulsed out straight back into another consolidation range. So market conditions have been poor. So that's not a reflection on the strategy, but it means that the strategy won't perform well in consolidations. Because this is a trending strategy. Like, we're trend traders. We want to be trading with the trend, whether that is the continuation phase of a trend or whether it's the pullback retracement phase. Okay, so let's have a little look at some examples. Let's first just start off by this chart, okay? I'm going to do some squiggles on it just so you can sort of understand it. And then what we'll do, we'll look at another example, and then we'll go through some of the examples over the last quarter, okay? The last quarter of last year. And you'll recognise some of the trades you've taken, and we'll see. And I'll show you what I want to be avoiding going forward and what I want to be looking for. Now, I've tried to put a mechanical spin on this. I don't like that word, even though it's important. It's imperative that you have a rule-based system with criteria. What I've also come to the conclusion is that just by simply having a fully mechanical system, it's also not going to go in your favour all the time, because logic will disagree with or experience and intuition will disagree with what your rules say, and sometimes you have to trust that. So it's about what I'm going to show you. I want you to go back over your trades that you've taken last year, and you'll see from my breakdowns, my markups, and from any of the stuff that you've taken yourself, you may already have a good understanding. Essentially what I'm trying to do, you've heard me talk about, like, when heavy momentum, internal momentum is against us, we don't want to be trying to catch a falling knife or catch a rising fire, whatever you call it. So it's about trying to wait for order flow to show its hand and shift on the 15 minutes specifically. Okay, so what I essentially want to be looking at is internal momentum before we're looking at an entry. And like I said, sometimes because of the strategy and the way that the entry model has been created, sometimes counter order flow, we're going to see like manipulation happen, like 4 hour structure, then we've got 15-minute bullish order flow internally, and then London kill zone, we sweep that and then we melt, right? But this doesn't happen often. In fact, it only happens 29%, or it only happened 29% of the time last year, which is simply not good enough for a consistent edge. So let's look at what these boxes mean. And essentially, it's just our fractal ranges, right? I've just coloured them bearish for red, bullish for green, just for ease of eye. And I'll be putting this in my markups. And again, you may already have noticed this. I talk about it a lot. There's a lot of trades that I've said, I'm staying out of this one because it's momentum. Well, this is just going to give a bit more framework and a bit more of a blueprint so you can look at it in the mornings and when trades are presenting, and you can observe order flow, and then you can make that call whether you want to take that trade. Okay, so let's just look at this example to start off with. Okay, so again, let's just pretend we're looking at a 4 hour chart, right? We've got bearish intent as our bias, right? Now, these boxes are the 15 minute. You can see we have bearish order flow, right? That's our fractal 15-minute range. This example, we see a shift to bullish. Now, this might be our engulfing candle. Now, if this is the case, on counter trend trades, more so than pro trend, this could just happen. This could just be a run on liquidity into buy side imbalance or a supply, and then we could continue melting. So Specifically for counter trend trades, I want to be waiting for 2 order flow ranges to shift in the opposite direction. So we can see here, bearish order flow range, bearish order flow range. So if I'm looking to buy, and I've seen this break, and we see a sweep here, I don't want to be taking that trade. I want to see another bullish order flow range formed, which is this one here. Then, what do we see? An internal one. Okay, we've seen internal sweep, there's our entry. Now, external, internal, it doesn't matter, but on counter trend trades, so against intent, I want to see order flow shifts. I want to see essentially bearish fractal ranges shift to bullish. 1, 2, now that entry could be internal or it could be external. That doesn't matter as long as we've had 2 order flow changes. Okay? Now, that's the first thing. Again, I was trying to put like a 2 order flow range rule in place where I'm only taking an entry if we see 2 bullish ranges in a pro trend environment and a counter trend environment. But I was taking too many winners out of the mix as well. And again, it's important. You can't just create rules just for the sake of it. You've got to have that background information to make sure that you're making that refinement or you're making a tweak for the right reasons. You're not doing yourself in. Because I've done it before myself and it's easily done. So specifically for counter trend trades, like I said, if we've got 15-minute bearish order flow, we see a shift to bullish, we have a bullish fractal range, we should mark out with a box like this, following the fractals like we'd normally. Then we'd have our second. As long as we've got our 4H counter trend confirmation, whether that's a neutral bias sweep or whether it's a counter trend engulfment on the 4-hour, that's when I'm happy to look for counter trend opportunities. Now, just because we've taken out this low, that does not mean we've shifted back to bearish. That's important to understand. Okay, but if we do see that happen, so we see a bearish order flow range form, and then we sweep that, then that's when we say no trade, because we've seen the shift happen. Okay, if we take a loss and then it creates a new lower low, tags us in, creates a new low low, then we've got a new bearish order flow range. So that's when we'd steer away and we'd wait for order flow to shift back to bullish. Okay, so I'll show you a little bit more about these examples now and I'll talk you through them before we go into some live stuff. But essentially that's what I'm looking for counter trend. Okay, now most of the time this will be the case anyway, because when we've seen that counter trend engulfment on the 4H, that's likely 15-minute intent breaking some internal minor structure. Okay, but again, we just need to be monitoring the momentum overall, especially with counter trend trades, making sure that we are trading pro order flow. Okay, I'll show you some examples in a moment as well. So this here would be a valid entry, right? Because we've got bearish intent, we've had a counter trend engulfment, we've had 1 bullish range, 2 bullish range, then we see an external sweep. That's our kill zone entry. As a counter trend buy, that's fine. Okay, I'll just mark it with dots so we can follow it. So we've got bullish range. Now, this is key. This is the important bit. So this is where the majority of my L's came from last year. It's from taking well-priced pro-trend positions like this one here. Short, pro-trend, pro-high time frame trend, taking out liquidity in premium, etc., etc. But if we look at order flow, like I said, this may be Asia. We may see Asia range. We have a sell stop, and it ends up being a continuation. Now, this happens a lot. Hence why I'm making it a refinement. So when we see this, we see a potential sweep, like so. We'd have a sell stop on this candle. And then what we see happen a lot is price tags us in and it takes us back out. Because what's happening is order flow is just continuing, like so. Small high highs and high lows internally to external range, high highs or low highs and low lows in this case. So in this case, when we've got momentum against us, this is what I'd class as heavy momentum against a directional bias. We're in premium, sells is our bias, shorts, but we need to wait for order flow to shift. That's what I'm going to be doing going forward. So what I want to see is a bearish range created. Then, ideally, And this is where I say I've tried to make it mechanical. But sometimes we just see that shift in order flow, that mitigation, and then price melts. That's fine. As long as we've seen a liquidity run, that's fine. But in an ideal world, what I want to be seeing is 2 shifts. So 1, then we see a new bearish range. So we've got first bearish range, we see that shift in order flow. Then we see that second order flow range bearish. Now again, this is where our entry comes in. Now this would be an external range sweep. But let's say, for example, it was like that. That's still fine because we've seen order flow shift. And we've got 1, 2 ranges. Whether we sweep that second order flow range or we remain inside it and take an internal sweep, that's also fine. So the magic number is really 2. But what I don't want to do is be steering away from clean setups where we've seen, let's say, a clear and an age liquidity, a 15-minute order flow shift or minor breaker structure, whatever you want to call it. It's the same thing. And then, being stubborn because I'm trying to keep things 100% mechanical, when if that was the case, then I would do it. But you'd simply be withholding yourself from some opportunity. So I want to see order flow shift, essentially. Okay, I don't want to be trading. If order flow is bullish and I'm looking for shorts, I want to wait for order flow shift. I want to see a bearish range created, and then I'd like to see a second range created before looking to get involved. Okay, then you can play that pro trend play. Okay, 29%, not good enough. Now, when I changed this and I went back with a realistic view on what I would have taken, that changed to 41%, meaning the strike rate was 59%. Now that's massive compared to a measly 29%. It's over double, pretty much. So that's why I've wanted to sort of make sure that the data's correct before I just go and change rules and put it out there, guys. Because everything that I do and share, or everything that I do for myself, I share with you guys. That's the whole point. I teach you how I think and from my experience, how I trade. And it's up to you guys to listen to that and then apply that information to your own testing and then put it into your own trading. Okay? So it's essentially just trying to understand that we don't want to be catching that falling knife. We don't want to be trading against internal momentum. It's just simply waiting for order flow to shift. Now, sometimes it's going to go without you, like I said, but only 29% of 2023, it did do that. Or sorry, only 29% of the time it worked. Not good enough, like I said. So that's sort of how we would look at counter trend, right? I without doubt want to see 2 order flow shifts. So I'd like to see 1 order flow shift from bearish to bullish and then another bullish range before I look for entry buys. And the same when I look for pro trend. When we see that pullback into premium or discount, depending whether we're bearish or we're bullish on the 4H, I want to see order flow shift before I'm just trying to catch that reversal, because currently momentum is bullish internally. So if I got in here, if I could just continue doing that, loss. So what I'm wanting to see is this. And if there's like a prime entry here, for example, then I'd still take that trade because it's pro trend. But in an ideal world, what I would like to see is this. Yeah. First bearish range, second bearish range. A+ setup. Yeah. Okay, let's move on to another example that I've drew. Pretty much the same, but just a little bit of a slightly different take on it. And then we'll look at some live examples, okay? So a sort of a bullish scenario, right? We've got neutral bias. Now I'll just use this for example's sakes, right? You can see we've got our 4-hour bias would be neutral, right? We can see that from this diagram we've got a bullish order flow, right? Now, this here, we've got a neutral bias, so this means we can play both sides of the range. Now, notice in this example, and again, this is just a chart example, but a diagram, a schematic, whatever you want to call it, but I want to show you this before I jump on the live, so you can just try and get a better understanding of what it is I'm trying to show you. So, this being the low, essentially it's the MRL, right? It's the order flow range that we use on the 15-minute. We're in premium. Let's say kill zone. We have a fractal printed here, and we have a sell stop. See a sweep candle, London open, and we have a sell stop. And it sweeps, tags us in, then smashes for our stop loss. Now, in this example, this would be why. Because we've got two bullish ranges, so I want you to be looking at the ranges leading up to your entry. What's come before you? If you're trying to short, have you had 2, 3, 4 bullish ranges? If that's the case, then you need to wait for order flow to shift, because your win rate's going to suck. It's going to save you a lot of losses. Less is more. I told you this year's about quality over quantity. Managing more capital this year, and I hope you all will be too. So it's about keeping that and growing that and scaling it properly. Don't be giving it away from taking unnecessary trades or low probability trades, more so, not unnecessary, because that's unfair to say, because they all have logic to every position that I take. But it's understanding which ones are worth putting risk on and which ones aren't. So, like I said, in this example here, like neutral bias, we've got 1, 2 bullish ranges. So what am I wanting to see? I'm wanting to see order flow shift to bearish. Now, in this example here, what do we see? We see a new bearish range created. Now, like I said, this is where we could look at it and go, right, we've seen one shift to bearish, and then we've seen an external sweep. It could be an Asia sweep into a nice buy-side imbalance gap or OB or something, and that would be our entry. Now again, that's still slightly higher risk because we've only seen the one order flow range, but like I said, there was still a lot of winners and a lot of success in last year's performance, in my own personal performance, when I'd seen order flow shift and I'm taking this entry, because we've seen order flow or structure change, then we see the manipulation. Great, that's what we want to be seeing. So this here would be a good example of when I'd be happy to look for shorts. This here, no, because the entry is before we shift. So essentially we're just in a large bullish range. And if you look at it, this is just the correction. The continuation is likely to happen until we see structure break. So again, this is going to be scrapped. I'm not going to be taking these trades anymore. And I advise you applying this, going back, actually looking at your journals and going, right, if I was to apply this, just simply looking at your charts or your screenshots, how many losses? And let me know, it'd be interesting to see, would you have saved? And then, again, in reverse, right, neutral bias. Okay, let's say that we could look for buys from discount. But what have we seen? We've seen one bearish range, two bearish ranges. We're in discount. We could see a really nice sweep of fractals. And then what do? We have a buy stop here, we get tagged in and then tagged out. Because we've got bearish order flow against us. So in order for us to look for pro trend buys, I'd want to see order flow shift. So I'd want to see, at the minimum, depending on whether a pro or counter trend, this happen. So structure shift, like so. Then I'm happy to look for entries, whether that's internal like this, or whether it's an external, like so. In an ideal world, we want to see it happen twice. But price action is printed differently every day. Sometimes it will jump out when we've seen one order flow shift, and you'll have a creme de la creme setup shape up. Sometimes you'll want to see more commitment. So it's about trying to make sure that you're training your eyes, understanding what I'm teaching you, and then applying it when the live markets are ticking. Okay? And again here, like you may not have taken a second buy if you got smashed on the first one, but you know what, I have before. Because the plan said so, because I've seen the lows manipulated, but if you look at what's happening, you're just trading against order flow completely. And it's giving away unnecessary percentage. Okay, so that's an example of, in a sort of schematic type way, of what the refinement is about. And it's, like I said, it's about just trying to trade with momentum. We understand the higher time frame momentum is key and essentially more important, without doubt. But we want to be trying to have all things aligned. So when we see that order flow alignment with the higher time frame, or in that direction of the leg that we're taking, whether it's the pullback phase in the 4 hour or whether it's a continuation phase, when we see order flow shift, then we can start to get excited and start to look for some setups. Okay, if order flow is heavily against us, I don't care. I'm happy to sit out because, like I say, the numbers don't lie. So let's look at some examples here. Okay, and what I've done is I've gone back and I've just, for this example, shown November to January. So essentially, recent price action through to December, right? So I'm going to drop down to 15M essentially, but these are all trades that were taken, all trades that were taken by myself. Now, if we just take a snapshot at some of the actual numbers, right? Let's look at the counter order flow and the minuses. We have 1, 2, 3, 4, 5, break even, so it doesn't count. Christmas week, 6, 7, 8, until pretty much in the gem before we started just completely moving sideways. Now that's 8% in 2 months. That is going to be removed. Okay, so again, if you just think about removing that 8% from your 2 months performance from end of November to, is it end of November or beginning of November? Yeah, pretty much end of November to end of January. So yeah, 8 weeks. That's 4% a month. Take that off your numbers. See what your ROI looks like now. And then go back and look at this bit of price action from 22nd November through to January. Okay, and we'll drop down like all of the ranges that aren't marked up with like liquidity sweep or intent. It means there's no trade setups there. Otherwise, it's pointless clogging up the charts. Yeah, all of these ranges that you can see are trades that have been taken live, that are valid. Right. So let's look at some of these now. Right, and I'll chop price back so we can have a little look, and we'll just go through it. Try not to spend too long, so I'll try and keep your attention, but it's pretty self-explanatory, like I said. So we're bullish, right? 4 hours bullish. We've got bullish intent as our bias in this situation. So let's chop price back. Now, what we can also see here is we've got counter trend engulfment with this candle here, which means that we can play sells. We can play the pullback phase, right? So let's drop to the 15-minute. So there's our counter trend engulfment. Okay, so here's a good example, right? We've had order flow shift. So we've had order flow shift to bearish here. Second order flow shift, kill zone sweep, manipulation, sell off. Okay, now let's look at this particular bit of price action. I didn't take a trade up here, that's why I've not marked it out, but it's, you know, would have been valid. 1 PM sweep. I don't think there was news, but this would, yeah, it's heavily counter trend, but again, 10 o'clock, yeah, it would have been valid. So exactly what I said, when we've got that 1 shift following the new fractals, 2 shift, a drive up, it sweeps, and we see the true pullback start. Now, heading into this bit of price action, right? We're in premium, we know we're playing the pullback phase, okay? Let's look at what happened before entry sets up. Right, okay, so if you look at our ranges, following the fractals, we've got 1, 2, 4. So we've got 3 bearish ranges following our fractals. Okay, so bearish order flow is on our side. So this is the type of stuff that I want to be seeing. Okay, not just because it's 3, but we're trading with overall order flow on the 15-minute. Okay, if this was 2, it'd be the same stuff. But this is what I'd be calling an A plus setup, because we're trading with the momentum. If it was pro trend, even better, but again, it doesn't matter. We can still play counter trend trades as long as they're safe and we've got the high time frame backing. But we can see here, we've got 1, 2, 3 bearish fractal ranges. We see manipulation in kill zone. Textbook. I remember that trade. A lot of you probably took it as well. Clean. Now, remember, our bias is intent. So our main bias is to look for buys because we're bullish. But if you just think about the example I've shown you, right? We've got a bearish order flow. So let's buy replay price. Right. We see price break out this bearish range. Now, again, this would be a valid trade, wouldn't it? Because we look at this manipulation and we try and play that continuation. But price is quite clearly, at the moment, bearish. So we need to wait for price to shift order flow. Okay, we need to wait for it to shift back to bullish before we can even entertain looking for buys. And this is, again, a trade that I've taken. Looking back at it, it's a shit trade. To be honest, there's no two ways about it. You know, I've taken better trades in my time, but this is why it's so important to journal your trades, guys, because you're not going to learn otherwise. You're going to be looking at the screen and go, "Why am I still losing?" If you're not looking, writing down where you're going wrong, what you've done well in a session, what you didn't do well in a session, you're not going to learn. So, a good example of a counter order flow trade, where I'll be thinking, well, it's in premium, what's going on? Like, it's really nice. We've got range here, we've taken out these lows. It's against momentum. But if we look at what it is specifically and looking at the technicals, 1, 2, 3, 4, 5, all the way down, this is bearish order flow. So why are we trying to catch a reversal? Wait for it to switch. And if it doesn't, no trade. Okay? Move on to the next range. Now, there's some winners on here that are pro order flow and counter order flow. I'm trying to keep it real to give you a true picture, right? We had another bearish order flow range here. And then we started to shift bullish. But I've only sort of included the last few bullish ones because I didn't want to clog up the screen. But we can see that, like, from here to here, we had a bullish range. Like so, and then we had another one here. Sometimes price can obviously get a little bit choppy, but that's fine. So here's a good example, right? We've got 1, 2 bullish ranges. Then I know we've taken this low first, but let's say we just took this high. This is where I would not have a sell stop below this low, because we've got 2 bullish ranges leading into the entry and we're looking to short. So I want to see order flow shift back to bearish before I look for sells. Okay, let's move that. Okay. Okay, so you see now we have a new bearish range. Fractal, high, we have a new low. Let's buy replay price. We're out of session time. Again, this is a great example of what I was talking about when I was telling you about Asia session, where we might have bullish order flow on, let's say, a pullback phase in the market for our structure, and we've got bullish order flow, and then we have a tight Asia range, and then we see a manipulation. We're thinking great Asia sweep, and then it sees a continuation, so they're going in the opposite direction. This is a good example, right? We've got bullish order flow, bullish, bullish, bullish. We have one shift to bearish, straight back to bullish. Then we remain in that bullish internal range, just in premium. Okay, then what do we see? We see another bullish range created. There's our entry, right? That's a trade, again, a trade that I took live. Asia sweep, come just OB. You can talk about it all day, but the fact of the matter is it's counter order flow. So we need to remember that. So this is a prime example of the trades that I will be avoiding going forward, because it may meet previous criteria, but the data is not good enough for it to stay in the plan. So that's why I'm changing or making the adjustment. It's not essentially changing, it's just trying to remove some of the lower probability setups that I have taken and you guys perhaps take as well, and trying to stick to high probable stuff. And this is the sort of the most process driven way, or again, I don't really like the word mechanical, but the most systematic way that I'm happy to use in my trading is by waiting for at least one shift of order flow, two on counter trend for counter trend opportunities before the manipulation sweep, and then we're looking for our entry. Okay, right, let's go back to the 4H and look at some more examples. Just get rid of these here. I should really have templated them on the 15M. We move on. Okay, back to the 4H. Play forward. There's no more opportunities here. Then we break, and then we see a new range created with intent. So again, we've got intent. We've also got counter trend engulfment. So we can look for sales in premium now and buys in discount. Remember, bullish intent, that's our bias, right? So buys is ideally what we want to be looking like. And of course, it's not always going to be the case. It's not going to match up with the daily or perhaps the DXY, but when we're looking at our system, and like the systematic way that we are trading, this is where we need to be looking at order flow. We need to be monitoring order flow. Is it aligned with our directional 4-hour bias? If not, then we wait. We wait for that shift. We wait for momentum to shift, show some commitment, and then we get involved with following order flow on the high time frames and on 15M. Okay, so this bit was a little bit choppy, but again, this is just real price action. Like the range was here to here, like it was a bearish range, and then we used a bullish range, then to a bearish range, bearish range, bearish range. Then we broke again into this bearish range here. Then we put in a new low here, another bearish range. Then we just had one bullish range, and then look what happens. So we've got bearish. Remember, this is momentum is heavily against us, and again, this is where, like I say, this here would be heavy momentum, but we've had one shift of order flow to the upside. Now, this doesn't look convincing in this bit of price action, and this is why I said having just two, you may find that you want to see those two shifts every time. That's fine, but what I'm saying is, if I was to do that all the time, I'd also lose out on some great winners as well. So it's going to be price action dependent. All I can do is share in my daily outlooks, and when I'm taking trades, what order flow observations are looking like from my perspective in the mornings, and what I'm waiting to see during the session. And you're going to learn from seeing live price action. Okay, but again, we've got quite sort of heavy bearish order flow coming into this buy. We're in discount, and then we just get tagged in, tagged straight out. Now, of course, this could just be the fact that we've just run a higher time frame high and we're seeking lower prices. But we're just focusing on entries at the moment. Okay, the higher time frame is something different. We know how to read that using the DXY, using the weekly, daily, looking at areas of liquidity, areas of imbalances, fair value gaps, all that sort of stuff. But again, an example of where we've seen one shift back to bullish, but when you're actually looking at price, it's just ranging. And this momentum is quite heavy. So trading against that is not the greatest of setups. Okay, let's move on to the next live example. Okay, so we have bearish in 10. So we also have counter trend in Goffman. Cool. So we can look for buys in discount, and we look for sells in premium. Okay, of this bearish range from this high to this low. Okay, so we can see in this example here, right, we have bearish order flow. Of course, because we've got a bearish high time frame leg. We're going to have, if we've got a bearish 4 hour, then the likelihood is we're going to have bearish 15 minute, right? We've got bearish range, then we have a shift to bullish. Okay, this is our first bullish range. Now, remember what I said about counter trend trades? This is exactly what I mean. We've seen one shift to bullish. This is internal sweep, it's counter trends, and you tagged in, you tag straight out. Okay, what I want to see is, before taking a counter trend trade, I want to see another bullish range created. That's going to give me more commitment that we've had one internal high and high low, then a second internal high low and a high, that we're going to see that pullback phase. But here, we didn't. We just seen one bullish shift, we've just reacted to something in here, and then we've just seen price take out the low. Okay, so again, the type of counter trend trade that I won't be taking going forward, right? And a good example of wanting to wait for that second order flow range to be created before we look for counter buys. Okay. Next. Okay, so we have neutral bias, right? One body close followed by a retrace. This is our 4 hour range. Cool. So let's look at, we've got neutral bias. Let's look at the 15 minute, right? Okay, so this is our 4 hour range here. You can see we've got quite a large range. When you've got large ranges like this, this is where you want to be trading with order flow. Because if you're in a big bearish range like this and you're trying to catch buys, it's not going to go well. Okay. There wasn't masses amount of examples because generally when we have large sideways ranges, it's not price action that I want to trade or advise to trade. But on some occasions, trades will present. But what I'm saying is we want to be trying to trade with order flow, and of course trying to trade at a premium of the range, right? So we can see here, approaching this entry setup, right? We can see we've got one bearish order flow range, followed by a second from this high to this low, and all of this is internal. Now remember, on the 4 hour we've got a big wick, so buys would be valid, right? But order flow tells us otherwise. Order flow is bearish. What do we see happen? Kill zone, we see sweep of buy side, great, there's our sell. Sell stop below this candle. We also see neutral bias, a sell setup present, right? This one's 10-15, so it's a little bit out of kill zone, but this is what we don't want to be doing. I thought this was in kill zone, so that's why I put it in there. But we've seen this here, seen this sweep, tags us in, and tag it straight out. Now again, get rid of this long now. No, it's not a valid kill zone time trade because price and time is important. We know this. We want to see that manipulation at the right time of day, London or New York, right? If we just look at the overall narrative, just zoom out, we're just following structure. So just have that in your mind when you're looking at a 15-minute chart. Observe what the 4-hour bias is, look at the 15-minute ranges, and you'll know where you want to be positioned. And if not, then just make sure that you're following my markups and you're watching the lives and you're checking my New York updates and all that sort of stuff. Right, that's why I do it. So this again would be what I class as a really clean setup. We've got bearish order flow, and then even internal order flow shifts to bearish. Like take out this high, bearish, bearish, sweep into this buy side imbalance. Lovely, really, really clean setup. So again, an A+ setup, right? Let's move on to the next example. There's nothing in this current range here, no valid trades that were taken or I'd advised to take. And there was just one in this bit of price action here. So our bias here was, well, we'd swept the 4-hour high, so shorts would be sort of what I'd be favouring, but we've got a neutral bias, so you could play buys as well, right? But again, let's just look at 15-minute inside of this 4-hour range and observe what's happening. Okay, so you can see here, right, we've got some news. You can just tell by the way it's formed, right? So we've got bullish order flow, and then we have one shift to bearish. Now, this is where I would say you need to be careful, because we have a large range, like I just spoke about, but leading up to this, we've been bullish in order flow. We've only had one shift. Now, again, this is still a valid trade to take, but this is what I'm saying. Sometimes it's not always going to work, right? You're not always going to. It's not 100% foolproof. Just because it shifts in order flow does not mean it's going to work every time. Okay, but the probabilities of it playing out when you're trading with order flow on your sides are going to tenfold increase. Now, here we've had one shift to bearish. Some may say it's two. Now, this is where it's subjective, because you can see here we have one break, and then we have a second break. The only reason we haven't got a second order flow range is because we haven't got a fractal here. Otherwise, we'd have two. In each case, this would be a valid trade. So that's why I've kept it on here. Okay. Now, this trade here ran to 1.68. It's before news, so you would have closed that trade anyway. So it would have been a break even, or you might have even closed it for a little bit of profit. But without news, who knows? This may have been a solid continuation, but price had other ideas and eventually did start a higher time frame uptrend from this point here, from a Fed speech, right? So again, just ask yourself, what's order flow doing leading up to my entry? What do the last two order flow ranges tell me? Okay. I'm going to show you a couple more examples, guys, and then I'm going to wrap things up, because it doesn't need to be overcomplicated. Like I said, a lot of you will already have pretty much a good understanding of order flow if you've traded the way that I trade SMC concepts for the last couple of years, or even the last few months. It's just gone the 1-year anniversary for Anon. So if you've been with me from the beginning, then you'll probably understand order flow and MRLs quite well. Okay, so let's just look at some of these examples. So 4H, we have neutral bias. Okay, we can look for buys from discount, sells from premium. Let's drop down to 15-minute and look at order flow. Okay, now we have this one large bullish range. Now, again, this is where you've got to first of all, you need to get some data on it historically to make your own call. Like I say, you may want to see two order flow shifts before you get involved in a trade to make sure you're on the right side. But not all cases it's needed. That's what I'm trying to say to you. And this is an example where it wasn't. Right? We've had one clear breaker structure, and so we shifted from a bearish range here to another bearish range to a large bullish range. Then we see kill zone manipulation, Asia lows, 1 to 3. Nice. Now, if you would have taken a buy in New York here, you would have had a sell stop underneath this candle. You took this high, but you wouldn't have been filled. And then this would have invalidated this into a bar. So you wouldn't have taken a loss here, even though it's in a large bullish range. But an example here of where we've seen one bullish shift and we've seen a nice trade play out. Okay, back to the 4H. I'm more interested in showing you the ones that don't work, because that's where you're going to learn. You're going to learn from your losers more so from your winners, guys. Okay, so let's fast forward to the next range. Okay, so we've got bearish intent as our bias. Excuse me. And then we have neutral bias. Cool, so we have neutral bias. I remember this range here. This is now January, so this will be more, but familiarise yourself with some of these trades, because you may well have taken them. Now, I kept this larger range. This small range to me didn't make sense. I kept this larger 4H range, and we've had counter trend engulfment. So counter trend buys are valid, right? In discount, and of course premium shorts when we get there. Now, bullish order flow. We see it shift here. This high, we break this high, and then we have bullish order flow. Then future bar replay, we shift to bearish, and then we see a small little bearish range created again. Then we shift back to bullish. I think this has moved a little bit. Okay, so we've had bullish range, and we've had bearish range, a sweep of Asia, and then we've shifted to another bearish range. So this is where, again, it's counter trend. We want to be having those two shifts. We've only had the one shift here. So this turned out to be an illusion trade. Okay, against momentum, right? This turned out to be like we ran Asia highs, like I said, into something. In this case, it was an OB, or this buy side imbalance gap appear, and then we've seen a continuation of lower prices. Let's fast forward. Now we're still in the same 4-hour range, right? So again, right, bullish order flow. Got a bullish order flow range here. Our second bullish order flow range. Now, we've seen this shift to bearish. And this was, I believe, a break even. Yeah. So, again, like we've seen, this is a trade that was taken. This was a break even. I put it down as pro order flow, but it's not, because it's counter trend, right? It's because I had my bias as intent, that's why. But you get the drift, right, guys? It's essentially waiting for counter trend trades. Essentially, we want to be waiting for those two bullish ranges, and then we can see a sweep of that bullish range. So a sweep of sell side as our entry. But what we don't want to see is order flow shift to bearish, and then we break like this. Yeah, that's what we don't want to be seeing. Okay, let's fast forward again. So we have order flow. This is moved. Not sure where it's moved from. Okay, it's irrelevant anyway. So we have, before this entry, right, we're still in discount. We have bullish order flow. So we have, this is our bullish range. then we have a second bullish order flow range, then we shift to bearish, and then we put in a second bearish order flow range. So this is now counter order flow. So if it runs this low, it's essentially just putting another low. Tagged in, tagged out. Right? Again, this is not what we want to see. Now, if, let's say for example, this would here would have been a valid trade, right, but it didn't present. We've seen a bullish order flow range into a second bullish order flow range. We've seen a sweep of that range. Buy stop here would have been valid. But then we broke it. Then we created a new lower low, second bearish range. So first bearish range, then a second. Once we see the second order flow range, we don't want to be looking for counter trend trades. We want to wait for order flow to shift back to bullish before looking to trade against that momentum. Okay? Last couple of examples. Okay, now this was a good example of an A+ setup. No, tell a lie, this is not. That's an example of not an A+ setup. So we've seen intent as our bias. Tell a lie, it's liquidity sweep as our bias. Then we've seen one body close and a retrace. So we've got neutral bias, right? We pull into premium. I'm looking at the wrong range here. I was just thinking that doesn't look like it's in premium. So I've deleted the range. So it's just here. So yeah, this trade here is just in premium. I took this on trade on my challenge account a couple of weeks ago on a live actually. There was news, so I was a bit skeptical of taking it on real proper gains, but we can see like this is the EQB here. Right, so we've got a bearish range, one, second bearish range, we take out that bearish range's high, sell stop. Right, this is where I'll be happy because we've got two bearish ranges to play that continuation. Okay, now this ended up being a loser, fundamentals, high time frames, concoction of reasons, but that's what I'm looking at, and that's what I'm changing going into the rest of this year, guys. Okay, so perhaps watch this video a couple of times. You may not need to, it may click. I know I've waffled on a little bit, that's generally how I roll though, you'll know that by now. In short, okay, when we're playing a counter trend position against the 4-hour trend, we want to be trading with order flow, right? We want to be waiting for a minimum of 2 order flow shifts before we trade in that pullback phase. Now, when we get into premium of that pro trend territory, whether it's neutral bias or whether it's intent, we want to wait for at least 1 order flow shift. In an ideal world, we want to see 2 to sort of give us that confirmation that the internal momentum has shifted, but that's not always going to be happening, or that won't always happen before price melts away and the sell-off happens, or price moves. So again, I don't want to be too strict with the rules for the sake of being too strict and sit there and watch trades go around me that I'd perhaps have taken last year and we wouldn't be having this conversation. So that's why it's about trying to keep it real, but at minimum I want to be seeing 1 order flow shift when I'm looking for continuations. So we're always going to be trading with 15-minute order flow. That's what you need to remember. Go back, watch this. First task is I'd really recommend go and have a look at last year's trades, or even at minimum the last 6 months worth of trades that you've taken or back tested, and implement this concept or this refinement or tweak or whatever you call it, and see the difference in your results. I guarantee that you will see a massive difference in your overall strike rate and your return on investment, whether that be on Q3, Q4, or the whole of last year, depending on how much you want to go back. But certainly going forward, make sure you're looking at order flow and asking the question before you take a trade, because manipulation is a key part, like I said, of our entry model. But we want to be making sure that we're trading with the institutional internal order flow, as well as being on the right side of the high time frames. Okay? I hope that all makes sense, guys. If you've got any questions or anything at all after you've watched this, please just drop me a message. I will be talking about this in my markups in the morning, so if you haven't watched this video and you perhaps see, or perhaps you're wondering why is Dan not taking this trade when it fits criteria, when I'm saying I'm not taking it because I'm waiting for order flow to realign or order flow ranges to shift from bearish to bullish, go and watch this video and then you'll understand it fully. But I hope you all have a good rest of your weekend, and I'll catch you bright and early on Monday, guys. Like I say, any questions, just drop me a message, or we'll try and get on a call this week. Last couple of weeks have been pretty hectic with testing and home stuff, but hopefully a little bit of normality back this week. So yeah, feel free to just ask away if you want any confirmation. But get stuck into the charts, get testing this, especially just compare it to your journal data for, like I said, last year or the last quarter, or just simply look at this bit of price action yourself. I guarantee you've probably taken trades within, and you've saved a lot of your bullets by simply adding this tweak into your plan. So enjoy, guys, and let's have a good week. Remember, we have to stay patient. Market conditions have been tough. They've been very difficult. You've probably seen on YouTube, a lot of your YouTube traders, the YouTube posse, whatever you want to call them, that a lot of them are losing funded accounts, and a lot of them they've blown a lot, and it's because they haven't got the experience. Like, don't get me wrong, I'm not saying they're bad traders. Some of them are probably very good traders and risk managers, but they don't know when to sit out of the markets, perhaps because they haven't got that experience. Some of them have. Again, I don't know them. I never bash anyone. That's not who I am. It's not how I roll. But ask yourself, how many trades have been taken in the last 3 weeks? Next to zero. It's because I know better. Stay away from range-bound conditions. Always ready, always prepared, but I'm not going to jump into a trade setup just because the 4-hour tells me so, or the system. If you would have done that, then you would have taken probably another 10 Ls just throughout January. So February, it's still early Feb. We need to see what happens really on the DXY. That's sort of dominating direction for most of the dollar cross pairs at the moment in terms of indecision. But again, we need to sit on our hands. The sell-off on the DXY is due. We've got CPI this week on the dollar, so that may be a big one in terms of what we see in the sentiment changing. But we'll see. We'll see what happens in the morning. We'll review what happens after Asia, and again, we'll show up and sit on our hands if needed be, and execute where possible when the trade presents. All right, guys. Catch you in the morning.